Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at the retail sector. November's retail trade data fell short of market expectations, raising the likelihood of a February rate cut. Retail trade rose 0.8% month on month versus expectations of a gain of 1%. Over the year to November, retail sales rose 3%. The rise in retail sales, however, the biggest monthly jump in 10 months as the Black Friday discount frenzy drew in consumers. The ABS going on to say that the popularity of Black Friday sales continues to grow, with promotional activity stretching across the entire month of November, not just solely focused on the Black Friday weekend. Mibui from ANZ thinks there may have been a switch in consumer behaviour to the sales period, indicating December retail sales figures could be weak.
That there will be a fallback in December, and this is very similar to the trend over the past 2-3 years. Of course, the question is how much is it going to fall back? We've seen a lot of headlines over the past few weeks about lines at department stores and JB Hi-Fi, of people queuing around Boxing Days. So maybe we'll not see as much of a big pullback in December as last year. Last year we had somewhat like 1.3 to 1.5% down month over month in December. So we expect this to we do expect to see a negative figure again.
Well, retailer Myer updated the market this week, citing its year-to-date performance has been impacted by a number of factors, including, quote, challenging macroeconomic conditions. Henry Jennings from Marcus Today told ausbiz it's a term investors don't want to hear.
What is interesting is when you read the statement, there are 4 references to the word challenging. Now, usually it's enough for one reference to smash the stock in challenging being out there. Here we've got 4 references to challenging. Of course, Premier falling on the back of that as well, because we are looking at that in the new year, that deal between Premier and Myer to simplify things, I guess. With the transformational combination of Myer and the apparel brands, that meeting taking place on the 23rd of January. But certainly there are tough times out there at the moment. And I think anyone that's holding out for an RBA rate cut in February is probably somewhat deluded.
And Myer shares sank on the update, pulling Premier investments down with it. Premier's trading update saying that retail conditions have also remained challenging, with customers continuing to experience cost of living pressure across all their global markets. Premier downgraded its apparel brands division, tipping earnings from that segment likely to fall by $16 to $20 million compared to the prior corresponding period. Well, the S&P ASX 200 consumer discretionary sector has gained around 24% over the past 12 months, outperforming around a 9% gain in the broader market. Analysts see many of the stocks in the sector priced to perfection, with potential downside ahead. Myer shares, of course, had a rocky start to 2025, but they've risen about 40% over the past 12 months. Ord Minnett has a sell on Myer, with David Lane telling ausbiz if investors want to be in the sector, he thinks Premier Investments would be a better pick.
My preference would be towards Premier rather than Myer, because you get the potential to get Myer shares, a large fully franked dividend, and you've got the jewel in the crown with the Peter Alexander and Smiggle. So I'd probably be steering clear of Myer, and if you want exposure to that sector, probably through Premier.
And when it comes to JB Hi-Fi, Mark Gardner from MPC Markets told ausbiz he thinks the stock is too expensive at these levels.
Whilst we love quite a few of these companies, the Wesfarmers and the JB Hi-Fis of the world, they're at super premium prices, and I really can't see them, maintaining that. We've had, rates are, there is no way we're getting a rate cut in February. As much as the analysts and the economists and the bankers want to wish for it, wishes don't necessarily translate into reality.
Meanwhile, Bell Potter has a buy on JB Hi-Fi with a price target of $98, which is a 2% upside from current levels. And Ord Minnett sees the stock falling a further 26% from here to $71. It's downgraded the stock from hold to lighten. Lovisa shares have underperformed the overall sector over the past 12 months and were recently sold off following a broker downgrade from UBS. UBS has a $27 price target, which is actually 6% higher than where Lovisa is currently trading. Analysts say Lovisa's consensus estimates for new store expansion are overly optimistic for the first half of 25, and like-for-like sales growth has remained subdued despite benign comparatives, while competition, they say, is also intensifying. And finally, when it comes to Harvey Norman, shares seem to be in a near uptrend, but the direction of the 20-day moving average suggesting that investors see some opportunity here for profit. The average price target on the stock is a hold, according to Refinitiv data, with a price target of $4.89. That is a near 6% upside from current trading levels. And that is your IG macro intelligence for this week. We'll see you next week.